Okay. All right, perfect. Exciting end to our week, don't we? We have followed through with the action that we were talking about last week in the markets and basically triggered a larger potential correction here on our intraday charts as well as our daily charts. So this was basically our main zone to get us going on some swing trades on the short side. And I'm going to start by taking a look at what's happening in the overall market here and what led us to that analysis for downside moves. So I'm going to come on over here, pull up, let's see, we'll start with the ES here. And so here's our daily chart on the ES. And as you may recall from last week, what we were looking at was one wave up, a second wave up, and then the potential for this third move. So what we were looking for was a lot more overlap throughout most of this week. A lot of things still had potential to just kind of creep higher. So that was our discussion last Friday. Essentially, we were looking at pretty much most of the major index components were looking that way. So they all had that room to put in that extra swing on the upside, but we weren't expecting a strong move. We were expecting that it would have a lot more overlap from one bar to the next and really not do those really large daily bars. And that's exactly what we had happen. So really nice, predictable move here. And let me put on some retracement actions. You guys can see where we're at as far as fibs go. I'm gonna have to close down some of my extra charts here too. Got too much going on. All right, so on larger zones, I'm gonna add our Fibonacci retracement. Maybe. Ah, come on. It kind of got stuck up there. All right, I'll just throw on a different one. It has a mind of its own, doesn't it? It's like, oh, I'm just gonna go here and we'll just go here. So I'll break that down. And we'll bring this up. And what you can see on the ES is that we're right around that 61.8%. The NASDAQ had a bigger recovery. NASDAQ made it up to 76.4 zone. But we're still right at some good resistance levels. And you can tell these are good fib levels because of the reactions we've had at the previous level. So we're going to have a little bit of support here at the 50%. But what we were looking at last week is that many of the securities where we were seeing the same pattern happening intraday would then have an even bigger correction at this point coming out of this pattern. So that's why this has opened up the zone for swing trades on the downside, and it really triggered yesterday. I'm going to go ahead and flip over to our intraday charts here. So on the upside, what you'll see is there's a little bit of a 2T type of pattern forming here as we were on the 29th. And it was so strong on that secondary move that it took a smaller 2T on the intraday charts to really get that flipped and turned over. I tried this originally after the market opened here. It was the night of the 29th, the market opened, but the way it pulled back, it was having a slower pullback. So I just went for support here, closed it out, and then used the 2T a little bit later as the guide for the continuation on the downside. Unfortunately, I missed that trigger. It was, middle of the night or something like that. But it did give the setup for going into continuation plays, which the main one that we saw yesterday was a nice two-wave beautiful measured time development move intraday. So I'm going to go down to some smaller time frames, show you what we had going on here. So this was the first two T zone. So you can see there's where it hit the measured move. So notice that that momentum is really strong there. So what that means is that it needs to do something to kind of shift that momentum and help turn things over. So what it did was it tried a really steep, smaller 2T here. This is where I actually shorted up here. So we had that smaller 2T in there, and it had this little tilted correction in here. And this is really important because that's what we then saw happening on the bigger scale. So I'm going to kind of go down even smaller here. We're going to scroll on back here. So there was a little continuation set up in here just on the smaller time frames. But then notice this. See that correction there where we have basically an avalanche, but then it doesn't go far enough to give a measured move or anything. So then it goes and kind of doubles that zone. And that's where the true trigger is. Now, watch what happens when we go and we look at a larger chart. I am going to go and let's see, I'm going to copy this. Put this in a new window. I'm going to put this on, let's see, we'll start with a 3,000 tick here. That is not nearly enough. Well, you can kind of see it here. But I'm going to make this bigger. We'll go all the way up to 20. So check this out. Look at that pattern there. So this move here, this is all happening basically right here on that 20,000 tick. So when we were doing League of Traders Live yesterday, what we were looking for was two possibilities. One, it was trying to do a little bit of a megaphone here. So we were looking at, maybe that would go as like kind of a kneecap, like a really fast continuation, because sometimes you'll get the avalanches, they'll go like that, and then they'll do 1, 2, 3 coming out of it. The other possibility was if it went past the time development necessary for that, which would have been right here, then it would go and basically double this time distance and then give the trigger for a bigger continuation. And so it's the same pattern as we had up here, just playing out on a much bigger scale. So this unfortunately triggered like right smack at the close yesterday. I still took it, but I was sweating it a little bit. But the confidence level on this type of trade is very, very high because it is such a strong move. So let me show you what that was doing on the intraday charts. And this actually gave us 2 shots here on the intraday. So I tried it originally right in here. So we had a 2-wave move up and it kind of did a third little push and started to turn over. So had some reversals in there, but it just wasn't getting the momentum. So it took me out and then gave me another setup here, right smack at the closing bell. So I'm going to have to pull up the tick charts for this one. And show you this. So here you can see the first attempt over here. It had this nice 2-wave move and then the extra flush and then shifted momentum, triggered short downside, but here's where it ran into trouble. So what happens at 1550 is that we get all the market on close orders coming through. And since the floor has been closed, we've seen way more reactions at that point. So what this did was it created basically a 2B. which ended up pulling this up here again. So another 2 waves up, and then a 2T here, kind of a momentum reversal, tilted 2T momentum reversal. And then we saw more shorts triggering in over here. So this is where I started to basically build that position. But notice the time. Look at that. It is 15:59. So you are going right smack into the closing bell. And what we had after hours, though, before the main real close, was this really nice mega lanch. So all of this here from the trap and the momentum reversal, and then we kind of got a diamond up here. All of this is building up based upon that time development on the 20,000 tick chart. So very, very high probability that this would keep going. Now, we have to also look at a bigger time frame to put this all into perspective. So this bigger pattern here, I need to go back up to 20,000 here. And I'm going to add more days on here because we actually need to see going further back. Because this had beautiful 3 waves up, really nice exhaustion. Basically, it was a type of 2T on the intraday charts. It's a little bit tricky to see that. Actually, I want to go back even further, more days. We'll do 30, 33. And I'll show you this on the NASDAQ too. By the way, we are right at the 123.6% extension from this breakdown here. So what you can see here is that here was our measured move almost exactly, and then it goes into the 123.6% extension. So this is actually pretty strong support zone here intraday. It's also the zone over here. So a good chance we get more of a reaction off of this here as we go a little bit further on. Okay, so what we've got here is 1, 2, 3, shift. So you can see that had that extra little flush there on that momentum reversal. So at this high, you got 1, 2, 3. You could call it a momentum reversal. You could call it a tilted 2T. Either way, we've got that momentum shifting up there. So really good zone there. There are some charts that show this even better. But what I want to do here is kind of just squish this up even further because we had a momentum reversal trying to form over here. And then it's basically going into a momentum reversal plus. But instead of just the 2 waves for that plus side, it gave 3. And so you can treat this as your first leg, and this is your second leg. This is the first correction, second correction. So you got that pattern in there. It's just it's forming it with 3 waves versus 2 because the 2-wave corrections are in here and tilted to the upside. Let's see here. I'm going to show you the NASDAQ because the NASDAQ's a little bit cleaner on that. Just gotta find out where I stuck my NASDAQ chart. Looks like I switched them all to the ES. Whoops. All right, well, we'll just change this one to the NASDAQ then. There it is. Notice that reaction is holding that zone on the 8,000 tick Getting support off of that level here intraday. This I have a lot of charts there that are trying to load. Let's see, I'm gonna go look at some of our other stuff to put them on charts while we're waiting. Close down some of the stuff I've got going on in the background too, that'll help. There we go. Okay, so what we can see here is that on the 60-minute chart, we can see those three waves a little bit cleaner. I'm going to pull this up on the 20,002. And there's this two-wave correction. It's basically a tilted avalanche is what you're looking at here. So it goes here to here. So you're looking at an avalanche that's tilted to the downside like that. So here we can see the three-wave movement even more clearly. And so just like I was talking about this as being a tilted avalanche to the bottom, this here is a tilted phoenix. So you're basically looking at wave 1 and wave 2. And then here's your two-wave correction in the middle. So sometimes this will look like this. It'll have a nice flat base. It'll kind of go out like that. And you won't have this higher high in the middle. So when I'm looking at trend development, you'll notice that over the past 6 years or so that we've started focusing way more on two-wave counts than we have on three. And that's for this very reason, because some of those two-wave corrections will look like this, and some of them will look like this, where you get that higher high in there. You can count them as three waves. There's nothing wrong with that. It's just that if you count them as two, it can kind of help make things clearer for you going forward, because it gives you a better picture of what can happen. So now we've got that 2T working its way here. It's come into target 2 right at the middle of this zone. So it's a pretty good support level, but there's so much room for downside still here. So when we're looking at the overall market, you want to look for corrections that are lasting like this amount of time or this amount of time, kind of anything where you see bigger impulse wave like this, and then how long that correction took before you got another impulse wave coming. Those are the times that you can get pauses here. So there's a lot more room here. I would have preferred this kind of held that first low when it did that second low here, just going into 12 o'clock, because what that would have done was it would have made it that we don't have this rounding off going into that support. So that rounding off into the support means it might try to spike back up in here again. It could even go like this, spike really fast and go and turn back around. So it can easily like try to flush out the bigger bears that aren't in it from better price levels. So be aware that that is a possibility simply because it has a slightly lower low here. Now, right now, they're close enough together that it doesn't necessarily have to happen, but it does increase the possibility of that happening. On our intraday charts right now, I want to show you how that's holding. Because again, this was the 123.6%. Look at that right there. See how perfectly that held? This is on the NASDAQ. You can have that exact zone holding there. Went into little Phoenix, 2-wave, kind of basically holding up here. So you've got a really, really good support zone here intraday for this to kind of play around with here for a little while. But like I mentioned earlier to folks and legal traders, be cautious on the upside plays because you are still going against that bigger trend. So that bigger trend is our king. And intraday plays off of support levels, especially when you're trying to time like pivot types of things, you're going against that. So you need to make sure you've got a lot of stuff lining up if you're going to try that, even as a scalp move. And in this case, you did have a number of things lining up here. You had this move kind of going for a little bit of an extreme momentum reversal. It did a flush into the support, but this was also a measured move on a larger time frame in the ES on basically the pre-market breakdown, and then compared to our afternoon breakdown. Notice that sometimes the 2T will get retested at the 76.4. That's true. It does. So what she means by that is that here's our 2T. Sometimes it'll pop back up here. So a lot of times that can create like a little head and shoulders in there. It's easier for it to try to do something like that if this move down is a bit slower than that last swing up. And what's going on? Exactly. It is indeed a bit slower. This could also do something where it goes and does like another 2T to shift and hold that zone at highs. So with rounding here, that increases those possibilities. You call that naughty? It is naughty. It is. You know what? The ES did that to me last night. I had taken off some gains. Let me show you. Doesn't make much sense for me to describe it if you can't see the chart. I've got everything linked here, so I need to unlink stuff so that I can don't have to reload everything. There we go. We'll get the ES up here. And I need to show you a smaller time frame on this though. Let's try 400. What you'll notice on the ES is that this drop was right into the 76.4% retracement. A little bit bigger than 400. We'll do 1,000. Here. So see this zone right in here? So when the gap filled, I went and added into the position because I had taken some off over here. There was a momentum reversal down here. It's probably on the time frame chart. So there were actually 3 lows here. And it was into fib support. So that got me out of some of it, but I still really liked what was going on in the larger time frames. But you'll notice it got off to a slow start here. So it had that little baby kind of 2T in here, and it kind of gave like a false move and then popped back up, and that told me, oh, nuts. I'm gonna have to wait this out. And then it did another move here for a better setup so that momentum shifted further. And it basically just took people out that were, you know, shorting a little too early. Let me put this on some other time frames again. I'm going to put on the 500, and then I'm going to go to the time frame chart for you too. Try 1 minute. So here you can see the pattern that I was going for was not a tube T. It was, well, we call it a steep tube T, but it's basically a two-wave correction like this. It flushes up and it'll come into like a main resistance level, and then it will turn and it'll flip over. And it usually starts off slower and then kind of gains momentum, but it's a pretty good reversal pattern. So I used that, and then you can see there was a little bit of an avalanche as well in here. And then it even had the two-wave here and tried to go. And this kind of just trapped everybody. But this Phoenix, that told me, oh, nuts, it's going to go back up again. So closed it out, waited again to the shift. And that's what we got going on here. But let me show you the retracement levels. That 76.4 is just a beautiful zone to watch. I'm going to go up to a bigger chart again. Like a 5 minute here. Maybe it was the NASDAQ that hit that in the after hours, but it came right into it right in the close here on this one. I'm trying to remember where I had my fib lines on. Might have been a bigger time frame. %100 there. Let's look at the NASDAQ. Oh yeah, it was the NASDAQ that did the 76.4. Like I know one of them did because I was using it for timing. So it came into the 76.4% here. And it looks like it pushed it and broke it, but it didn't really, because it pulled back and that's where your Phoenix is at. So it's hugging that zone. So it's basically just did a flush. How many trades do let's see. How many trades would you do in the first 90 minutes after the market opens? Really depends on the day. I don't really take more than a couple. On an average day, I probably take about 5 trades on average, and that's not counting executions, because executions might be more as I'm like building into positions. So I consider like one trade to be like one setup, like how many setups am I taking in a day, but I might have more executions on that setup. So for example, the head and shoulders here that we were looking at a little while ago this morning, that might have a couple of executions in here, timing that short, but I would still consider that to be one trade.
The other view that we had, and all right,
let's go take a look at some of the other
change
markets
the share.
and what to look at here on the bigger time frame. So the daily chart, you guys, I'm still expecting more correction action.
All right, one
I think
sec,
that
everybody.
the odds of taking out this previous low over here
the other
are pretty
sheet
high.
up.
We've got a nice shift in momentum here. So there's a good shot of doing that.
Let's see.
Let's see.
Trade chat.
I said let's see, and Euless puts, can we look and see? Yeah, we can.
That's not Google Sheets.
That's funny.
Oh, here we go. Okay, everybody should see
see
the
here,
original
that two-wave
sheets.
tilted correction.
Original
So it tried to
back again.
go up and do a third move, but
Okay,
it's
great.
just
That's in the Zoom room,
faltering.
and
So this is going to be
I'll keep
something
that
that's going to
going
be
on the
easier for that
Ninja
to turn
as
back
well.
lower too.
All right.
Is it
Enjoy
a
your weekend,
momentum
guys.
reversal on the daily charts?
Stay safe.
Essentially.
Again, I'll be here for the
Usually
remainder of
don't
the day.
get like
Just the
momentum
mic will
reversals
be
down here, but
off.
because it only has one wave up, so it increases the risk that this can go further and basically treat this like a tilted phoenix. But that zone there is major resistance, and since it held that level, the odds are higher that this will go and head back down to this previous low over here. Intraday, you can see there's a tilted avalanche into yesterday's close. So you're right around a 50% retracement here. So there's a good support level in here, but I would suspect that it's going to go and give continuation patterns for the downside. Is gold a wandering child? Let's take a look. By the way, the ES just did a tilted avalanche too that brought it back to the low. So it's still just kind of flopping around at that 123.6. So this is good resistance here on gold. I've been trading gold a lot, basically since oil blew up. I've flipped over to gold. So we're at a good resistance level, but the momentum is so strong here coming off of this low that there's a good chance that this can pull up even further. So you can see it's basically in this trading channel here. And this is the first time we've had this really strong move up in the central part of this channel. So that can allow this to try to pull up a little bit more. Let's go to a bigger time frame. 60-minute. Basically, see it's at a do or die point trying to hold on here. And then here's our daily. So as you guys know, we've been pretty bullish on gold. Hasn't really changed. I'm still bullish on gold. This has a risk of a bit of a megaphone reversal, but it's holding it up. So this is actually a slower correction over here than here. So I'm not too concerned yet. Yes, if this can't get going off of this zone, it's going to increase the risk that it can pull back down. Basically, you can get like a shallow avalanche or something going to pull this down further again. But right now, we don't have that quite yet. So as long as it holds this zone here, we can still see more popping on the daily chart. Can I show you the tilted avalanche on the ES? Yes, I can. I've got the MES on this chart open, so I'll just show you it on this one. It's right here. So one base, two bases. It's the same pattern that we were just looking at on the 20,000 tick. So that helps it bring back to retest the lows. And again, this is the 123.6 that we saw earlier. Still, I would continue to be cautious on the long side because, again, bigger time frames, very bearish. Let's see, what other charts do you guys want me to look at here today? And you can ask about basically anything. We've got mRNA again here. Here's another one of those tilted continuations. This is a nice 2T as well, and it also had the 3 legs versus 2. So it's the same type of pattern that we saw on the daily charts. So mRNA has basically just been hanging around at the highs here. This is one that can still push to higher highs, and the fact that it's not really letting go of that high yet is good. It does have tilted avalanche potential. Basically, it would be 1 and 2, 1 and 2. And it could go there, but I don't think that's going to happen. I think it wants to keep holding up to push that further up. So I would not want to be on the short side of this thing, even though you had a parabolic move here. Tesla, I think I've got a chart of Tesla already open. So Tesla did exactly what we were looking at. First move, second move, and then it goes for the third move. Like we said last week, everything was basically doing this. So that then created a little bit of a trap. And now you got your correction, and it can still keep going now with this correction. If it tried to go up again here, if it tried, pulled back in here and tried to go up again, you'd basically be dealing with a megaphone. And since it already had a correction over here, the megaphone as a second move, it is much, much, much more difficult. So our timing for forward focus last week was just, timing to push that move higher. And basically most of the market, we saw that happen, and lots of choppiness as it did it. But then we got up to those levels where we're then getting our corrections. So all those corrections triggered yesterday. But if you watched last week's session, you would have a good heads up for it. Love is dead. At least it was last time I looked at it. Apple, same thing. Really good for a correction in here. You're right around the 76.4. Maybe not quite. Let's see here. Yeah, just a shy. Oh, it was so close. So close. So 2 waves up into there, really strong. Like we said, some of these can try to do an extra little tap. I don't know that we're necessarily going to get that though. I mean, that's what we were talking about in the overall market. It's not necessary for that to happen with what we're seeing so far. So this is pretty easy room to come back into here. It's around 265 as a conservative pullback on that. Definitely would not be buying this as a new longer term hold here at this level. Is there a possibility we could get a higher high on it on the daily? Yes. So what you have is the main move into the 76.4. That's where you usually get the bigger correction if you have a nice steady move up into there. So that's usually going to be where you'll get the channel breaking from the upside. And depending on how that channel breaks, the momentum on that channel break, if it is not too strong, then we can get a move up. So we usually look for 61.8 to 50% as those next pivot levels in situations where that possibility is there. It just depends upon how fast it pulls into that. Again, I'm aiming more for the 50% to be able to pull into that zone on this one. That will make it harder to do continuation, but it would still be like a megaphone. So that possibility is still there to try to bring it back up to those previous highs. But I want a correction first. I guess I got love opening on another chart. CPB. Campbell's. I'm in this one. as a longer term investment, it's still looking pretty good. It's basically doing like a bigger megaphone here. This needs to hold and do kind of a longer 1, 2, 3 move on the upside. And it's not perfect. It has the 2 moves up, but the second move is stunted. So ideally, it would be right smack in the middle here that we would get that correction. And that allows us to do a phoenix more easily and another 2-wave up. So it's struggling a little bit here. It's not perfect, but it still looks okay. Just want to watch this base. Any strong move from here is going to be easier for that to go lower. So if it goes down, does like a kneecap or something like that, that would get me out of the longer term position. What I tell you guys on the market, I just said be cautious on those supports. So it held the 123.6 and then the overall market here just went and put in a new low again. The bears are firmly in charge. LUV. So this is looking lower, but it's probably going to just keep chopping lower. I don't see it doing like a massive move. We talked about this last week too. So what this can do is this can pull down in here. It could pop back up into this range, but right now it's not doing anything to suggest that. Let's see what's going on intraday. So you can kind of see it did like a little bit of a trap and pop. I would have wanted to have seen that hold in order to pull this up. So this tells me this is going to go for a lower low again. Look at our bonds. You guys have anything else you want me to look at too? We'll have a couple more minutes. Bonds. It has a possibility of doing a tilted continuation, but it's at a do or die point and it's favoring more of the die side of things. So see here that 2-wave correction there that's tilted? That has the room to go up. Since this is so extreme, I wouldn't expect an extreme continuation, but it does have the room right there to do it. So what you'll see is that if this hugs this and breaks basically what would be a parallel trend channel, that can trigger more selling to come in more quickly. Let me put that trend channel on there so you guys can see it. So if that basically hugs there, kind of plays around there and can't get going, it can fall. And even if it comes back into that, that's still a little bit longer than I would want to see for time development. Let me show you why. So here is our first correction here. So if I grab that and pop that over here, you've got a couple levels. You got like that slightly higher high there, which puts you at this point. But where the momentum shifted was really like in there. So like here, I went from where the momentum started to shift. So if I do that same thing over here, oops, it's not quite lining up perfectly. I don't know why it's jumping from one bar to the next. But if we use that bar there, it's at a do or die point. If this is going to bounce, it would go here. And I just don't see that really trying to do that very easily. Be very cautious on the upside on this. Usually when you get like a really strong move down like this, and then it pops back up, it's harder for that to keep going. It's almost better like when you have a hard drop that it puts in like these slower little corrections, like the tilted move, and then goes and builds momentum. That's easier to bring it up. So it kind of like wiggles everybody out down here, and then it allows it to go more strongly when it finally gets going. X daily, I think, has room to pull back down pretty easily here. You're right at a good resistance zone, and the overall momentum on the upside is slower, even though it tried to spike here. The overall channel is still slower. Did this have earnings today? Looks like an earnings move. It's going to be a hard one to try to recover again because it had such strong momentum here, popped up to the higher high, but then went really fast back down. So that usually will keep creeping lower again. So this happens with news stuff where you'll get like an initial reaction, and then the secondary counter reaction often is bigger than the first initial reaction. So if you have something that has an initial reaction that pops something to like a higher high coming out of a channel and then has a counter reaction, that counter reaction usually keeps going. You see it a lot. Well, not so much anymore, but you used to see it a lot when the Fed would have their rate meeting and their rate announcements for their Fed rate announcements at 2:00. When people are like trying to determine, if they're going to cut rates or raise rates or anything like that, you would see that happen a lot at that time. But basically, any time a news event comes out midday, that happens. GO, I don't think I've traded this one. What is this? Grocer. Got big, huge megaphone here. So if this holds right here, that has room for another pop. Just kind of treating this as an upside. This is a two-way correction, and here it's at a do or die point on the daily time frame. So if you get like an intraday setup at this zone, I would use that as a buy to build a position as a swing trade. And then if it doesn't get going, then you're looking at it as a tilted avalanche. So it will basically depend upon how it gets going. So if it just kind of hangs around here on the daily charts, then just like that pattern we saw on the 20,000 tick charts in the overall market, that could trigger a short again there. But at the moment, it wants to go higher. Let's see the intraday. Can kind of see that a little bit better on the intraday. Let me put in the trend lines or trend channel. So what I'm looking at is this holds this like that. You've got a trend channel like going this way. But if this can't get going here, then what it does is it switches the wave count. So then you end up with this to this with the possibility of then breaking down. So it can flip that wave count. So it then goes into more of a tilted avalanche versus the 2B. So the 2B is here. So you have to have that faster reaction here. A 2B example too is if you look at like a 400 tick on the NQ, you've got a 2B. Let me show you that. So you can see it on the ES too. Let me put it on here. It looks a little steep on the tick charts. It doesn't look that steep on the time frame chart. Well, I guess it's still kind of steep. I'm just looking at bigger time frames. It just got a flush there though. So it's getting going a little bit slower. I was just looking at a different tick chart here. It's getting going a little bit slower than we would normally want for it to be, which again, all of our buy setups, which would normally be great buy setups, are much higher risk right now. But let me show you. Here's the flush. So a better to be would happen not like this, but more like that. Have a steadier move so that it gets off to a faster start off the support. So you can see it's struggling to get going here. It can still build once that channel tries to break. But we are just looking at scalps on the upside here intraday. The reason this has a good chance still to try to go, even though it's not like the prettiest to be, is just because the impulse waves on the larger time frames, we're at an extended zone on them. So you can see here, comparing previous impulse waves, notice that we are pretty darn close to maxed out on where a zone would then lead to another correction again. Some of them go a little bit further. So there's room for it to try to push a little bit further, but it is at an extra zone there. So it's basically higher risk both ways at this point because the momentum is so strong on the downside that it can still push down lower, but it's at a measured impulse move zone. So it could go into a longer correction at that point. And since we have time correction, there's room for price correction. This started out as a price correction and then went into time correction, but the whole thing is a time correction. So could pop, but again, very high risk. So everything right now I would do the rest of the day would be a scalp. And I actually don't know that I'm going to do too much the rest of the day. I might call it a day after this. We'll see. It would have to be a pretty exceptional setup for me to take it at this point. All right, you guys, I know there's some things we didn't quite get to here today, but if you bring them up on Monday, we can go and pull those up as well. Thank you. Yeah, I've got some science experiments and all of that fun stuff with my little guy for this afternoon. So it might be just a homeschool afternoon going on here. He kept trying to interrupt me during session, forward focus. I'm like, nope, face to the hand. I don't know what he was trying to get me to do. Turn on his iPad for something. Yeah, we'll take a look at more of those on Monday. So, Karan, all of those you can just bring up you can bring it up even in Telegram too. If you want me to take a look at them over on the Telegram channel, I can do that. All right, you guys, have a wonderful rest of your day and have a good weekend. And I will see you back here next week.